Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Create new agreements based on respect and love. Take the responsibility to make new agreements with those you love. If an agreement doesn't work, change the agreement and create a new one. Use your imagination to explore all the possibilities. Market-wise, let's take a look at it out here. We had the Dow Industrials down 18, Nasdaq off 4, S&P's off 2. Gold contract up $3, trading at $1,664 an ounce. Silver up 18 cents at $30.21 an ounce. Platinum flat at $1,535 an ounce. Light sweet crude, where is she? She's up 19 cents at $91.19 a barrel. Bonds up 17 ticks at 148 even. King dollar flat at 79.69. Euro up 18 at 132, and the yen continues to weaken. That's up 42, trading out at 86.05. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Can you spell rejection? Well, this is what you got, folks. You got rejection of lower price, and it had lighter volume. So, what do we have here? S&P gets down to 1401. Rejects that level, closed at 1418. And as we were talking about this yesterday, what it's going into, folks, is this. It's going into the November 7th downdraft. That downdraft had 878 million shares. We're into it with 529. So what does it mean? Well, what it means is that you're going to get a nice little bounce going here again. You get volatility, no doubt, in the marketplace. We'll see what happens in Washington. But this baby wants to bounce, I suspect, once again into we're at 1418 on the S&P. That can get into 1432. Doesn't necessarily have to go to the highs, but 1432's game. And this is where the whole volume characteristics going to come into it again. The reason being is that you get the bounce tomorrow, you're going to be on lighter volume. All it means you're building cars, and the volatility's there, and these numbers will spin off. That setup there still would be a bearish setup, meaning that the S&P wants to come down and get into the lower swing point from 1343. That's say we get the bounce tomorrow, Friday. Then you got to remember something. Monday, okay, the 31st, it bounces Monday, you get lighter volume. Okay, now let me give you that would be the bearish scenario. Why? Because just like today, we come back down in lighter volume. You want to get to swing point, rejected the swing point, wants to go higher. Now, let's picture that if you come back in and we don't get a bounce, and then we start bouncing on January 3rd, that'll be a different animal. And the reason being is that there'll be volume in the market January 3rd, 4th, or 5th. So I suspect you're going to get the bounce now. Will end up happening, January 4th or 5th. We'll come right back down the other side. That's your S&P. We go over to the Dow Industrials. We take a look at the Dow. It's the same type of setup in the Dow. What you have with the Dow is this. Dow Industrials today, we pulled back. We were down at 12,964. Rejected that lower price. Closed at 13,096. Bottom line, that's saying, okay, we can make a run for the 13,251, which is about another $150 up. Nasdaq Composite. We know what the composite's all about. Composite continues to be all about Apple. But what we had out here today, Composite hit a low of 29.51, rejected that level, closed at 29.85. That says the Composite. And the Composite, by the way, is the weakest index out of those 3. Actually 4. We can do the Russell 2000. The Composite, right now, we closed at 29.85. The Composite can basically try to run up to the gap, which is 3034. That's how it's set up. And it's when we're pulling back in here, the Composite went against the swing point of the 14th of December, but it's the November 7th deal, folks, that basically has given it a lot of support. That's where that shakes out. That was when we did the last leg down in the S&P. That's when the S&P had gone from 125 points down. Well, that last leg down, going from the 6th to the 7th of November, we gapped down, had a lot of energy, and that's what's basically supporting this up here right now. Now, let's go over to Apple. We take a look at Apple. So, what does Apple do out here today? Apple also gets down to 504.66. The first low that was established in Apple was the 506.75. We had volume there of 452 million. Now, 45 million, rather. The next time we got down there, we had volume of 27 million. Well, today we had volume of 16 million. What that does is this. Apple will bounce once again. To me, there's no juice in Apple, but you know what? It wants to bounce. This leg down here took it down another 90 bucks. We just went from, well, it took it down, yeah, $90 to be exact. We just had gone from $594 on a counter trend bounce down to 504. This bounce here can probably take it up to somewhere around 534. That's the way it's set up. Go over to the gold market. We take a look at gold. What the gold market is done out here today is this. We did 86,000 contracts. Not enough juice. There's just not enough juice in the gold market to get anywhere right now. That's still building cause to come into the 1636 to 1631 area. Dollar index. Now, this is where it's going to get interesting, folks, because this is what you have. So, when we look at the dollar index, what we had out here today is this. She rejected lower price. She had lighter volume. We got down to a price point of 79.42. She closed out at 79.70. Now, the correlation is pretty intense, and this is what it is. The only reason the dollar index could even stay sideways for the last week and a half is because of the yen. What has happened, now the yen's the second largest weighting inside the dollar index, but it's a very small weighting, but it's still the second largest weighting. And the yen has continued to get weak. I mean, the yen in the past 2 months have gone from 77 to 86. Incredible move, no doubt, meaning getting weaker. So that's helping the dollar index stay on an even keel. So this is the key, though. The euro, what the euro has just done is this, folks. The euro, okay, so the euro today got to a price point of 132.84. We closed at 132.39. What that was doing is that it was testing the last spike high out here of December 19th. Now, that's on a 6-month basis, but watch what happens on a year basis. You know, and this could absolutely happen. What we're doing with the euro right now is that it's trying to spike into the high that was generated in February of 2012. And this is what my point is in all of this. That spike high is substantially higher for a currency. It's 134 versus 132. But what that also is, folks, is 100% move of a move. And specifically what that means is this, is that in February we were at 134. We came all the way down to 120. Now we're back to 134. That's the most that anything ever does. Okay, 100% move of a move, you know you're going to get a correction. Can it bust it a little? Yeah, a little. It's a day or two. But when you get a large move like that, you're going to get a pullback. That's the point. Because the point there is that the yen has saved the dollar index from coming down dramatically because the yen got so weak. The euro is ready to move, meaning turn. The euro turns, you know, I can expect, yeah, I think it can spike even the 133 next couple days, no doubt, which will give the market a little more breathing room, lighter volume. Then you're back down to the other side. Okay, bonds. That's the last tie-up here. So we're going to take a look at the bond market. What do bonds do out here today? Not enough juice. Volume-wise, we had 192,000 contracts. Point-wise, went up a half a point, which was decent. We're at 147.31. Bonds are going to need about 400,000 to 450,000 contracts to get back up into the 150 area. Just not enough right where we are right now. We were just coming into 500,000, and we did 192,000. When it's set up like that, bottom line, I suspect you're going to build some cars, and you know it wants to get there, but it's going to need more juice. It needs 2, 3, 4 more days, whatever that is. Let's take a look at some of the large cap stocks out here. This is what we have in the large cap. We had IBM was up 76 cents. We had 3M down 43. Walmart was up 20. Citigroup was down 30. We had Coca-Cola flat. Disney was down 32. Ma Bell was off 12. Let's go over to Amazon because what we had is this, is that AMZN. What we had with Amazon is this. Amazon yesterday come down pretty hard. What that was all about, of course, is that Netflix went down. It was Amazon servers that went down. Amazon had pulled down from $257 yesterday to a price point of $248. Today, it rejected lower price. Amazon, once again, wants to make a run for a higher price. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.